Okay, no problem. I would moved on to Simsky. Just get the Simsky chart. Okay, here we go. I have the Simsky chart. Have the new students open and gotten your chart already, your platform already? Not many. Okay. Okay, that's good. All right. This is a special rate for you guys, okay? And also for the new, for the older batch, right? There will be an increase in terms of the price for the round trip. Okay, was 0.98, right? And with GST. But this time round, what did I say? Is 1.38 or 1.28? I can't remember. It's 1.3 or 1.2. I think it's 1.38. But it's still a lot more cheaper because even with 1.38, you can make a profit with just one tick. Okay. Now let's come back to Simsky. On Monday, I talk about the number of lines to draw. So in total, we have 6 lines. Okay. So the first would be the previous high and previous low. Okay. So this is current bar here. So this is previous. So we just draw in a previous high and a previous low. So these would be the previous high, previous low, right? Okay. Then to draw in the wash lines. So I always stand by 2 wash lines, one magenta, one green. All right. So we just have to, plug in the most recent wash lines. Okay. Anybody traded yesterday? Yesterday, in terms of the Simsky trade? Nobody, the seniors. Okay. All right. Okay. I thought that yesterday was quite a nice day to trade. It's just a little bit rocky, but the move was really quite firm. Okay. But anyway, let's take a look, right? So I have the most recent wash lines. Okay, that means that the most recent wash line is this green color wash line here. Okay, how is this wash line being drawn? Okay, I'm just gonna mark 2 and 1 here. You find that 2, the high of the closing price of 2, right? Candle number 2, it closed higher than 1, the high of 1. Okay, it closed higher than the high of 1, and this means that there were probably some people who bought in. Okay, so essentially we are able to draw in a green wash line here. So I've drawn in a green wash line. So this is the green wash line. So this will be your W, all right? And your range will only happen if price close back down. Okay, so that's your range, all right? So far, any question here? Okay, then what happened is that we will go to the 1 hour, all right, and draw in the opening bar high and low. Okay, so this is the opening bar. And how do I know that this is the opening bar? What is the characteristic of an opening bar? Or how do you locate an opening bar? How do you spot the opening bar? Yeah, on the price chart, on a 1 hour chart, right? It's start at 8. All right, but essentially it starts at 8:30. So if you go to the 30-minute chart, you should see the opening bar starting at 8:30, not at 8, right? Okay, so I now put my mouse at that bar, which is the opening bar. All right, and you look to the left, that should be 18 October 23, 0800. This is the opening bar. Right, so we want to capture the opening bar, and at the opening bar, we draw in a high and a low point. It's like exactly what I'm doing right now. Okay, so you can see the opening bar. I've drawn in a 2 green lines that shows the OBL, all right, and OBH. Okay, now we are looking for a short today. Okay, there are two things, right, to tell us why we are looking for a short. Number one is that there was a close. That means that price, right, had a close. That means price close, yeah, it closed below, all right, the opening bar low. Okay, so this is the reason why we are looking for a short. Okay, now at the same time, the bar, that means at the same time, price is also below the green wash line. Okay, so there was the push up here. You see that there was a push up here, right? That resulted in price closing higher than the previous high. Okay, now, but this push up very soon did not happen and did not follow through. Okay, that means that there was an earlier push up, but when it did not follow through, means that it actually didn't move up accordingly, or it moved back down. Okay, so we saw that price went below the green wash line and below the opening bar low. So as a formula, okay, for a sell, and this is equal to where price is less than OBL. Okay, because if you want to sell, right, you want to sell when price had a confirmation. So by looking at less than OBL, it's your confirmation in H1, okay, H1 time frame. So this rule is only applicable, all right, I mean, and only applied, right, in a H1 time frame. That means that you only apply this rule, which is less than OBL, or which is higher than OBL if you're buying, all right, and only in a H1 time frame, all right? So you can see that price, this is the OBL, right? So this one is the OBL. Price had a close below the OBL, and that sets pretty much the sell setting, okay? All right, so when you have a buy, it will be more than the OBH, and that's also equal to H1, okay? So buy must be above the OBH, which is the higher line. Sell must be below the OBL. Okay, all right, I'm just going to pause here to see whether you have any question, because this was exactly where I left off previously. Okay, any question? Kenna? Good. Let me know whether things are clear so that I don't keep asking. Okay, all right. Now, where is the trigger bar? Where is the place, right, to trigger a trade? It is when at the end of the 1 hour close. Okay, I repeat these because I'm coming up to a very important point already. At the end of the 1 hour close, which is, for example, right, if you take a look at the opening bar, okay, the opening bar is at from 8:30 to 9. Okay, now the new bar after the opening bar will come in at 9:01. To be exact, is 9:00 01. Okay, so the new bar will start, right, at 9:01. Okay, for example, 9:01, right? Now the end of the opening bar, that means the end of this 1 hour bar, right, would happen at 10 o'clock. Okay, now essentially this means that we are shorting, all right, when price is to close below the OBL. Okay, all right, so essentially we are shorting at the close of the next bar after the OBL, and in this case here, our shorting time will be anytime at 10 o'clock and subsequently. Okay, so the close might happen at 10, it might happen at 11, might be 12, might be 1, might be 2, or following. All right, the whole idea is that you use the opening bar as a gauge, and you make an action after price had a close, all right, after the opening bar low or high, and opening, and it must be at the end of each 1 hour. So for example, from 9 to 10, from 8:30, right? So we have 8:30. to 9. So this is your OB. Okay, then when the next bar, when it happened, is from 9 to 10. Okay, so this is the second bar, right? So you will only short when the second bar confirm close below the opening bar low, and you do it at the end of the bar, and that would be around 10. That will be at 10 a.m. Okay, I just want to give you the hard rule. That means I want to give you the rule here before talking about deviation. So one question here for OPL, why isn't the low at the low? I don't understand the question. Why isn't the low at the low? The low is at the low of that opening bar. The opening bar is defined as 8:30 to 9. Yeah. Sometimes I didn't draw properly. Like that. Sometimes I think I take for granted. I mean, it's obvious that that's the opening bar, so that's why I didn't draw properly. Yeah. Okay. I want to make sure that you guys know, right? Okay. So the short, what is the reason for the short? The short was because price had a close below the green wash line. So the first condition met. Okay. At the same time, today, there was a close below the opening bar low. So the second condition met. And with these two conditions, we have a sell signal. I want everybody to be clear about these two conditions. Because in the lesson, in the preview, you're asking me about, yeah, so how do you enter, etc., etc. Right? So this is how it's being entered. As we go, we're going to have more things to come in, right? Okay, remember we had that previous low line and the previous high line. So what is the purpose here? Now, do remember, because in futures, we do not have a lot of historical data because, as I explained, every month there is an expiry. So every month we will roll into a new contract. Okay. Now, when this happens, it means that there are two groups of futures traders. Just give me a minute. I'm just going to switch on the light. Okay, so there are two groups of futures traders. Okay, first group would be those who are using the futures market as a hedge. Okay, meaning that they have a position in STI, right? And they cannot unwind the position because they need to keep a certain holdings of STI, okay, or maybe the component stocks. So, but they still think that the market is going to be bearish for a short while. So they can't hedge. All right. So they have to go to the futures market. Sorry, they can't sell. So they sell their stocks. So what they will do is that they will go to the futures market to short. All right. To hedge into their existing long position. Okay. You will find that many times the market, right? That means that either the issuers or either whoever is trading, etc., right? They use a lot of all these tools to hedge. Okay, basically, if they can't hedge, they can't do anything. Okay, so this first group of people who are going there to hedge, right? The second group of people is where they are just pure trading. Okay, they just want to go in to just do pure trading, right? So these are all very short-term people. So when you have very short-term action, you can't look at levels which are very far away. Okay, so you probably can just look at within the month or maybe at most, in the next 2 or 3 months. Now, in this case here, that the previous low or the previous high will act as a support or resistance, which is your near-term support and resistance. Okay, so right now you find that this long bar, right? Let me just clean it. This long bar here, this one, right, had a close below the opening bar low, OBL, and below the previous low. Okay, so if let's say this bar didn't have a close below the previous low, then the previous low can still be acting as a support level. Okay, but the fact is that the previous low is also broken, then it means that a very important support had been broken. Right. So in other words, the use of the previous high and the previous low, they are essentially support and resistance. Okay. So we are not using too far away support resistance. We're just using the previous high, previous low as a support resistance to tell us the range. Okay, so this is the function of the previous high, previous low. So then you're going to ask me, so a signal when it happens, must it close below a previous low or close above a previous high? Okay, ideally, yes, because it means that you don't have a lot of resistance anymore. Now, but if it doesn't, then jolly well make sure that there's lots of space for between your execution, that means executed price, and your previous low or previous high. Okay, I just give you an example, right? If this is previous low, and let's say, right, this is your execution. That means that this is the close of the bar at 10 a.m. But price is right now very, very near to the previous low. The previous low can just come in to act as a support. So it's very difficult to short it. So in other words, right, if you want to have a good signal, then it is necessary for price to close below the previous low or for price to close above the previous high. Okay, so I'm just going to pause here for a while and see whether you do have any questions. Basically, the previous low and the previous high is acting as a support resistance. That's all. Okay, okay. So next question to you. Do we have a sell signal today? Let me know whether yes or no. Okay, good, good. Okay, very good. Yes, we have a signal, but how to say? Okay, that comes for the execution part, right? Yes, we have a signal and it's below the previous low, and also we will be jumping. That means at the close of the 1 hour. So yes, you will be shorting inside here, right? But the problem is what? The problem is that if it's a very long bar, sometimes that you feel that, okay, I have to pay for a lot of stop loss, a lot of losses. So what we do one way is that we actually limit into the previous, the opening bar low. So if the opening bar had been broken, we will limit, all right, to the opening bar low. Hopefully that it can retest this opening bar low for us to sell again. Okay. Now, if it's a buy, okay, buy means that price actually close above it, right? Then we hope that it can come down here to the opening bar low so that we can sell, we can buy on the limit order. Okay. All right. Anybody needs me to repeat this? That means that just now in the video, I said that, okay, we can be potentially looking at the opening bar low for limit order. This is what I mean, right? So there are two types of entry. One is a market order. Market order means that you see it, you see that the close immediately below the opening bar low, you hit the button and you short it. Okay. Now the other way is that you say, okay, it is a little bit too much already because it has moved too much. So what I like to do is I like to place a limit order at the opening bar low. You can't place at the opening bar high, okay? Because when you place at the opening bar high, right, it's not logical, okay? Because it means that price is actually strong enough to move to the opening bar high, okay? So we will place a limit order at the opening bar low. If you are selling. If you're buying, then we will place a, if you're buying, Then we will place a limit order. Just give me a minute. I accidentally closed my window. So I was removing my pen. Then it closed my window. Okay, here we go. Okay, so we were able to place a sell limit here. This one, sell limit for a higher re-entry. Oh, okay. Now next, let's talk about where is the stop loss. If you are placing a trade, right, because it broke the opening bar low, then your stop loss is the opening bar high. Okay, so if you are selling here, let's say you sell here, right, and the stop loss would be OBL, not OBL, right, would be OBH, which is opening bar high, plus a buffer, because we need to add a buffer for Simsky. All right, why is that so? Because if you don't add a buffer, then the market will see this very important level. Okay, so we add a buffer, right? So what is the buffer? Usually I will add 0.2. But some people might want to add 0.1 only because they say, since it moved up already, I don't think that it is sustainable. Okay, so if you short based on OBL, then you long based on OBH, opening bar high. If you long based on OBH plus a buffer, then your stop loss, right, would be based on OBL. Okay, so let me just write this down for you. So, okay, so if I sell right now, right, then my SL is equal to OBH plus a buffer. Because I short here, I don't want it to go up here. Okay, now if I buy, your SL is equal to OBL minus buffer. Okay, say for example, I long here. This is my place to long, right? I hope they can go up, but I will put my stop loss here at the bottom. All right, so this one is where if you have the OBL, then it means that you minus away the buffer so that your stop loss can be even lower. Any question here, or you need me to demonstrate later on? Okay. Yeah, so later I will place the order for you. Right. Now let's talk about target profit. Yeah, buffer is 2 ticks. Actually, I would like to place 0.2, so that's 4 ticks. That's my preference because I like to have slightly a little bit or more buffer. The magenta line is not relevant today. Yeah. So when there's a day that is relevant magenta line, I'll explain that. I just focus on the short side here first. Okay. If you short near at OBL, well, but the signal had already formed. There was already formed, so we shouldn't be taking note of previous low, okay? Because you're just hoping that it can spike up there. Right or wrong? Okay, because the signal had already formed. Okay, so let's take a look at profit target. How many of you, the seniors, can remember how to calculate the profit target? Okay. Now, first, what you have to do, you have returned to me already. I also need to return to you. We add the ATR, okay, indicator here. All right. What if we limit order at PL instead of OBL? Wow. You can do that. Okay. If in this case here, right, if you limit at OBL, you will get a slightly higher price than using the previous low. You can do that because it shows that you are interested or very interested to get the trade. And I do that very, very often. Okay. But just remember that nobody knows where the limit will be. Nobody knows that where the limit order, right, will happen. It's either going to be OBL, either going to PL, right? Previous low. So nobody knows, right? Okay. ATR means average true range. So what I need you to do is to add the ATR inside your chart. So how to add the ATR? Here we go. Click on the one that with the chart and search for ATR. Okay, ATR is called average true range. Okay. ATR average true range and add that in. Once you add that in, right, change the setting to 9. Double click that. Double click this set ATR name here to the left hand side. Double click. Change the setting to 9. It should be 14 or 12 for you, but change it to 9. Okay. All right. Now, what I'm going to do is that I'm just going to grab something and be back in 2 minutes. All right. Can you guys who hasn't added in the ATR, please add that in and I'll be back in 2 minutes. Huh? Okay. Sorry for that. Okay, I'm back. Sorry for that. Okay, why 9? Because we want to exit faster than others. Because if it's 10, it means that we are getting the ATR for the past 10 days, right? 9 means that we wanted to exit faster, just a little bit faster than 10 days, okay, which is 2 weeks. Yeah, I will explain how we're going to make use of ATR. All right. Now, when you add in the ATR for the 1 hour chart, only for the 1 hour chart, right? You find that this is 0.789. Okay. Now, this means that in 1 hour, the price will travel average about 0.78 average in an hour. Okay. All right. So you find that in a Simsky movement every day, right? They are range. They're fixed range. Same as STI. STI, if one day can move 50 points, is big news. Or if one day it moved by 100 points, right, it's even bigger news. Okay? All right? But normally, STI can move like 30 points. And that is normal already. So in this case here, we are using the ATR to calculate how much
the price can move in this particular movement. Okay. Now, can any of the senior write me the formula of the ATR? I want to know how much you have returned to me. When you say you returned to me already, ma? There's so many seniors up here. Any seniors can write me the formula of the ATR, or how to calculate the target profit of the ATR. Wow, really don't know. Donna can answer. Yeah, I know Donna is 1 to 3 times ATR, but how do you calculate that? What is the formula? Where to start measuring from where? I'm actually asking you guys because I'm eating something very hungry. I'm so sorry. Gary, this is the TP. Sum of the past 9 days ranges divided by 9. But if you go inside the 1 day, right, the ATR is already there at 3.6. That means that 1 day, Simski can move about 3.6 around there. Okay, sometimes between 3.6 or 3.7 or 4. This means that in the past 9 days, Simski moved by every day, right? About 3.6 plus minus around there. Okay. So going back into the 1 hour chart, to calculate the profit target, right? Depends on the direction because we are shorting, so we use OBL. Okay, if we are selling, we use OBL, right? So we take the OBL and the first TP. Just now we talk about where is the stop loss already. The stop loss is your OSL, okay, is equal to your OBH. Because we are shorting when it's below OBL, right? So your stop loss is your OBH plus a buffer. Okay, so this is the formula of your stop loss. Okay, so right now I'm doing the formula of your target profit 1. They are all together 3 target profit. But most of the time, right? Most of the time, when the market move, it would most of the time already hit into the TP1. Okay, in this case here, right, from what I'm looking at, right, it's already hit into TP1. Okay, so the TP1 is equal to OBL minus what? Really forgotten. ATR. Yeah, simple as that. 1 times ATR. Okay, 1 times of what ATR? At least Lin can you remember? So nice, Lin. Of this current value of ATR here, which is about 0.794. Okay, so because we don't have 0.794, right? It's either 0.8 or either 0.795 or 0.79. So what I like to do is always to reduce it, to lower it, lesser it, right? 0.79. So the TP would be, take a calculator where you need to measure the value of OBL. See, I told you the memory gonna come back. Can anybody tell me what is this value of this OBL? Can you measure for me? Because I'm on a pen. Pen cannot measure. I mean, on a pen and cannot switch. Switch already. I need to erase all this formula. Can anybody tell me what is OBL? What's the value of OBL? Okay, 283.35. 283.35. Sorry, no space. Minus 0.79. Can I just like shortcut to 0.79? Easier for me. Okay, can I just shortcut to 0.8 so that it's easier for me to do the calculation? Okay, so press the calculator. Oh, sorry, 283.35 minus 0.8. How much is that? See, for futures trading, we always have a calculator. Even simple one also need calculator. 283.35 minus 0.8. Oh, yes, good. So the first TP, let me just write down here, right? It was the 282. You see, this is the math part. We don't really need a lot of math. We just need simple math. Now, which means that, where is 282.55? 282.55 is somewhere around here. Okay. All right. So done already. First TP we are done. We're probably looking at the second TP. Okay. So let's do the second TP. How to get the second TP? OBL minus how many ATR? Yeah, 2 ATR. Okay. Now, so it means that it's 283.35 minus 2 times 1.8, 2 times 0.8. Okay, so that's 1.6. Okay. So it's the OBL minus 0.8 times 2. Okay, thanks a lot for the answer. So TP2 is equal to 281.75. Okay, now where is 281.75? It's probably around here. All right, so that's probably around here, right? Which means that the market is looking at this value here. Oh, right. So because when the trigger happened, that means that when the trigger bar happened already, right? It already hit right into the first TP1. So it doesn't make, it means that you don't even have the first TP to work on. It means that this is probably a little bit more extended. That means that it's extended already. All right. So I wouldn't want to short on the market. So that's why in the video, I said that this more probably where you'll be looking at a limit order into the opening bar low. Okay, when you do the opening bar low, it means that you do have a space, right, towards the TP1. And if not, you do have the space to the TP2. Okay, now when you, let's say, limit at OBL and you work on TP2, right, that would essentially gives you a 1.8 difference. Yeah, correct. Yes, so it gives you 2 times the ATR, which is minimal our target most of the time. That means that most of the time, if we are trading into SimSkip, a lot of time we are working at 2 times ATR. Okay, all right. And of course, then, you know, if you're aggressive a little bit or you have more positions, then you will work towards the third TP level, and that's OBL minus 3 ATR. Okay, all right. So you do have the next profit target here in this manner. Okay, now I presume that you need to write down in terms of the target profit level, right? I presume you have to. Otherwise, I'm gonna ask you like next batch. You're gonna ask me, I return all that to you already. Okay, can I? Any question here? We talk about buy side. Okay, step by step. The buy side. Okay, we won't cover the buy side today. We just cover the short side. Next week, when we have the buy side, we cover the buy side. Okay, one by one, we cover one by one. Let's not do so aggressively. And this is a good thing about all this constant hands-on or constant regular how to say revision and all this stuff, right? Because you get to get that section, right? Part by part. You don't need to do too many things. Okay, I'm just going to erase, but I will write down the answer because we're going to place the order later on. Okay. And can anybody give me the OBH number? What is OBH number? Because that's the stop loss, right? Can anybody give me the OBH level? Okay, 284.8, right? And hence the 284.8 or 284.4. OBH has only one number. Yeah, okay, thank you. And then what's about the stop loss? Then if stop loss is every time I add 0.2, then where is the stop loss then? If the OBH is 284.8 and the stop loss is a buffer of 0.2, then what is the price of the stop loss? 285. Okay. All right. Very good. Okay. I'm going to clean everything here. We're going to place an order. And I actually had an order already, not here, but in another broker, because I don't have the cheap rates like you guys. Okay. If I do it here, later you're going to see my statement is 21.40. No, 21.40 is GST at 7%. The now is 1.08. It's 21.60. Is that so? Yeah, I'm paying 21.60 per trip, by open and close. Okay. So what I like to do is I like to show you how to place the order. Okay. All right. Now, so you just minimize this. We're gonna place limit order for this trade. And we're going to place the limit order at the OBL here. All right. So there are 4 tabs here. One is the working order, completed orders, open position, and the price alert. So these are the 4 tabs here. Oh, Zhichong is so nice. Zhichong is with us today. He gave the formula in Facebook Live. See, Zhichong is working hard. The rest of you all return. Okay. So under working orders, under completed orders, open position, price alert, and news. Okay. So what's important is your working order, completed orders, and open position. So these are what's important. Okay. There are a few ways to place the orders. Number 1 is via this trading log here, trade log. Now, how do you turn on your trade log? You look at this one that has the tools that wheelbarrow or something, right? Click on that. There's this trading log here. Okay, you click that, it will bring out the trading log. You cross it, that means you close it, right? Then you won't have the trading log. Okay, you just click on it, then you will come out this trading log here. All right, so that's the first method they can place here. The second method is to go to the left side panel, go to the contract set, go to the relevant contract. I don't want to put the November contract, or you can just go to the current month contract. That means the active month contract, right? Click on it. Okay, once you click on that, you have this place order here. All right, so once you place order, where's my place order? Here we go. It doesn't want to come out just now. Okay, so once you click on this place order, it will pop up this screen here. Now, that is where you start to place your order. All right, this is your quantity. I always like to use the plus button and the minus button. I don't like to key in the number here because sometimes you can key wrongly become 21, okay? Or you key wrongly become 11, also can happen. Okay, so by default, theirs is 1. You can use this, which is to become 2 or 3 or 4 or 5, okay? Or you can use this to minus, okay? All right, so that's your quantity. That means that 1 means 1 contract. Now, there are different order types. Okay, let me just explain them one by one. If it's GTC, means that this is good till cancel. Good till cancel means that it will be there. Your order will always be there until you have canceled it. Okay, why is that so? If you don't put the GTC, you put a limit market stop or stop limit order without the GTC there, right? This means that every time when it stop at the T session, the end of the T session. Remember, the T session is where the cash market ends, right? So the first half of the trading sessions until 5:25. So when you don't put in the GTC, that means that your order will be automatically removed and cancelled by the exchange. Okay, because the exchange will do, the broker will do the settlement for you. All right. And the order will get refreshed in the exchange every time when it's the end of the T session. Okay, so when it's the T+1 session, you will be regarded as a new session. And if you don't put a GTC, this means that your existing order would be removed automatically when at the end of the T session. Okay, all right. Now, what kind of orders will be removed? All your stop loss all your limit order, all being removed and refreshed and equal to don't have if you don't put a GTC. Now, if you put a GTC, these orders will only be cancelled or removed only when you give the instruction. That means you have to go to the platform and say, I want to remove my GTC. Otherwise, it will always be there. Okay, so it's very important for you to take note, to always know when you need to put a GTC or when you do not. And especially if you are traveling or important stuff, please always come back and check your position, because this platform doesn't automatically cancel your order for you. Okay, all right. Now, this one clear, because I want to nag on this aspect, because a lot of people forget that you put in a GTC and then you find that suddenly you on holiday, you got positions triggered. I mean, I'm one of them, so I'm actually scolding myself. Okay, sometimes, oops, hey, how come I have this order? Oh yeah, I forgot. I didn't remove my GTC. Okay, all right. Now next one, as one is limit order. Limit order means that it's like queuing for a trade. You queue for a trade, so it's limit order. It's like currently the price. Let me just get the chart. Currently the price is right now at 283. Okay, wait, the chart is not refreshing. It does happen. The chart is not refreshing, right, guys? Do you think so? The code is correct. The chart is not refreshing. Yeah. I think so. Okay. Right now is a little bit correct, but oh yeah, it's moving already. Okay, so what is limit order? Limit order means that you right now price is at 283.1, right? And I want to place a limit order at 283.4, for example. I want to place it higher, right? So in order to queue there to place it higher, you have to use a limit order. Okay, you have to use a limit order. All right. Okay, next one. What is the meaning of market order? Market order means do it right now. Okay, so when you key market order, then you just either choose bid or ask, right? And then they will you just either choose buy or sell, and then they will just key in the order for you right now. Okay, so no queuing, nothing, just market order. What is a stop order? Stop order means that you put in a stop loss. All right, so you said that, okay, I have an existing trade and I shorted, and I would be putting this order as a stop loss. Okay, stop loss. So you tell the system this is a stop order, right? And next, what is stop limit? We're not using this one, so I don't want to talk about it, right? So I don't want to talk about things that we are not using. Okay. Now, so how to place a TP order? A TP order is also a limit order. Now, why is that so? Because in the trading of futures, it's always first in, first out. Okay, first in, first out. Let's say, for example, I have an existing sell order. This is my current order. Okay. Now, let's say if I sell again, that means that, let's say I sell -1 here, right? Now, if I sell again, I will -1, right? So in total, I have -2. Okay. Now, when you have a first in, first out, it means that if, let's say, you want to close your order, okay, you want to close your order, right? So in order to close your order, how do you neutralize this sell? You have to. How do you make this -1 become 0? Yeah, you have to buy, right? So you have to +1. Okay, that means that you have to buy. So let's say, for example, you have 2 sell, and then you say, oh yeah, next one, I want to buy. Okay, so you +1 here, you bought. You want to have 2 sell and 1 buy. That's it. No, the futures market doesn't work this way. All right. What they will always do is that they will do the first in, first out. They will always neutralize your position. If you have one sell and subsequently you go on a 1 buy, it doesn't mean that you're going to have 3. You're going to net out this one here. That means neutralized. -1 + 1, you have 0 position, no more. Okay. And then right now you only left with 1 sell here only. Okay. So in order to close your sell position, you just have to buy it. Okay. So in order to close your buy position, what do you have to do? You have to sell it. Can? Okay. So this is very important. Just remember, it's always the first in, first out thing, right? So if you have the starting position as a buy, to close it, you always sell it. If you have the starting position as a sell, to close it, you always buy it back. So it's about neutralizing and becoming 0. Okay. So in the futures market, it doesn't hedge. Okay. It doesn't hedge. Yes, SK, you got it. All right. First in, first out. This one you remember. It doesn't hedge. You cannot say that I got -2 and then I need to have 1. There's no such things. It will neutralize. Oh, okay, very good. Memories coming back. Okay, then next, that means that you are only concerned with, number 1, if you want to do a limit order, you place a limit order. All right, if you want to trade now, you just place a market order. And then next, you place a stop order. And if you want to take your profit, it's back to a limit order. Okay, so there are only 3 type of order type here. Okay, then what is GTC limit and GTC stop? Okay, now this means that it's a good till limit order, which you can use to queue for a trade or to place in your target profit. And then what is GTC stop? This is where you use it to place your stop loss order. That is GTC. Okay. Now, what happened is this. Let's say, for example, I placed a limit order. Okay, I placed a limit order, right? So this one, the memory must come back already, right? So I place a limit order. Okay, this is 300, for example. I place a limit order I want to sell. All right. And then right now the price is 299. So it means that price would have to go up, okay, to hit my limit order, right? In order for me to sell. Okay. Then what I also do is I place in my target profit at 295, okay, underneath here. That means that once I sold, and then if price comes back down, I be able to take a profit. So these would be my limit order. Okay. Then on top here, I will place in a stop order, stop loss, right? At this level here. So this is called the stop order. So these would be the type of orders that you are placing. All right. But of course, then you can hit the market at 299. That means that you have already a market order right now. Okay. So this one clear. Huh? Now, what is the meaning and implication of the first in, first out? That means that if right now the price is 299, okay, it doesn't move up to trigger your limit order. If it doesn't go up to trigger your limit order, then what happened? If it move back down, that means that if it moves down here to trigger the bottom first, that means that from 299 plunge 295. This means that your limit order to buy back a short would be open first. Okay, because the system does not differentiate what you are going to do. To them, if you have a limit order to sell and it doesn't reach, then your limit order to buy reach, they will read it as you want to buy. Okay, but for you, you will think that I want to sell first, and then when it goes inside my lower price, I want to buy, right? And then you say, I will buy back whatever that I sold. No, okay? So it's very important that you see, right, how all these are all being placed in. All right, so this one can remember already? Okay, so very important. You remember the first in, first out rule. Okay, and when you place the order, you have to be very careful and you have to constantly come in and check which one gets executed first. So what I always do is I always place in one order only until that order is being what is it? Okay, only when that order is being executed, being done, then I place in the other orders. Okay, just to be a little bit safer. Understand? Okay. Yeah, so once your order has been triggered, then you place in a stop order, or you place in the limit order. All right, at the same time, you can place in a stop order at the same time. This is fine. Okay, so I'm going to place the order right now. So same thing, I will just key in 283.35. And usually my habit, right, is that I want it to be a bit of a buffer. So if the the opening bar low is 283.35, I will put in 283.3. Okay, so let me just key in the order here, place order. Okay, so I want to do a limit, all right, at 283.3. Can? Okay, done. So I want to do one, and I want to do limit, and I want to do it 283.3. And do I want to buy or do I want to sell? Okay, I want to sell, right? So I click the sell button. They will ask you, do you want to place the order to sell the SIMSKI October contract limit 1 at 283.3? You agree, you confirm, you say yes. Then you'll be here already. All right, so you have under your working orders -1 that is pending, but you don't have anything on your completed order. You don't have anything on your open position. Okay, now next one, I would be placing in a stop order. Okay, so same thing, I will go to this one here and do a stop order. All right, what is stop order? Is my stop loss. Okay, so my stop loss will agree to be 285. Okay, now 285 here. So I change, right? Okay. Now then I decided, oh yeah, maybe I should do 284.9, or maybe I don't want to do a stop order. I want to do a stop. I want to do a stop limit order, for example. Sorry, I want to demonstrate this negative thing. Okay, so let's say, for example, I do a stop order right now. I change, right? Okay, you realize that whenever I change, let's say I key in 285. Whenever I change the order type, let's say I go back to limit, right? You will automatically go back to your original current price, right? You see that? Oh, so when I change my order type, every time when I change my order type, right, this price, right, will change. So do not assume that you key in 285 already, and then you go and change your order type, and then, you go and change your order type, it will stay at 285. Okay, you have always to come back and double check. So for example, the right step to do is I want to key in a stop order. I want this to be a stop order, and then I change the number to 285. This is the right step. What I'm trying to say is that anything that you change in terms of the order type, excuse me, will automatically change the price. Yeah, so you have to double check. Okay. All right. Now, just now I place a working -1. Okay, -1, right? Then in terms of the stop order, should I buy or should I sell? My current order is a -1. For the stop order, should I buy or should I sell? Remember, the objective is always to neutralize. So if your current order, right, is -1, right? Okay. And you always ask yourself how to make it to become 0. So you have to +1 here. Okay. So if it's +1 means that your stop order, you have to buy. Okay. Always make sure that is a neutralized position. You always want to make it into 0. So they ask you stop order $1 at this price. Do you agree? And you say yes. So right now you have 2 working orders already. All done. All right. Now you find that what happened? You find that when I place in the order, okay, it took my margin here. See that? It says that my current margin, which is initial margin, is 1429.99. Was that 1430 lah, huh? Okay. And my available margin has been deducted. That means that when I place the first order, this is the margin which is being consumed. All right. So this would be the margin that's allowed me to place new orders. Okay. No margin, no, you can't place orders. All right. So you see that even with $5,000 here, it's very comfortable to place in 1 contract. But if you place 2 contracts, then your margin will be 1430 multiplied by 2. Then you won't be that comfortable anymore. Okay. So I repeat, right? Every 5,000, only 1 contract. Because you need to have your extra margin, okay, as a standby in case that the market move against you. Of course, then you're going to say, I'm going to have stop loss, right? But the thing is that a lot of time, a lot of people don't execute the stop loss. Okay, so it's very important that you have enough margin. So every 5,000, maximum that you can open is 1 contract, maximum. Okay. Okay, very good. Now then, take a look at the working orders. Nothing at the completed, nothing at the open position. Take a look at the working orders. Let's assume I want to change my position. I want to limit at a higher price. Okay, then you can press this right button. All right, and you can just say, okay, I want to modify this one. I want to change it higher like this. And then you click amend. All right, and this, they ask you, you want to change the limit price to higher price, do you agree? And if you agree, you click yes. And this is how you change your limit price. Okay. All right. Now, again, into the working orders, let's say I don't want to place in these orders. Okay. I want to cancel these orders. I want to remove these orders from my system. Make sure, go to this place again, and then press the cross button. When you press the cross button, that would show you want to cancel the order, and you say yes. Okay, and make sure that you cancel all the orders. Now don't go and cancel your limit order and then you remain your stop order, because they're individual orders. You have to cancel all of them. Okay, done, no more. All right, so under the completed orders, you have these 2 orders here completed, but they were canceled. They are not open, they are just canceled. Okay, so under completed orders, you have 2 orders here. Under open position, you have nothing. Under working orders, you have nothing. So these are the 3 tabs that you need to monitor. All right. And added this one is a price alert, which you can key in the price alert here. I'm going to talk about it in the subsequent lessons. This will let you know where is the OBH, right, easily, or OBL easily for you to place an order. Okay. All right. So far, any question? Okay, no question, Okay, very good. So we do have a sell order, sell trade here, okay, because there's a limit order up here. All right. I mean, I'm not executed in this platform, but I'm actually filled, right? Okay, so we do have, and then you're gonna watch for the first TP that's gonna come. All right, and that would be 281.75. Okay, now 281.75 is actually this value here. This one. Okay, I will not stick to 281.75. I would actually move it up a little bit higher, okay, to 281.9 or 281.85, because you know that there's a cluster of a support here, right? And 75 is actually just slightly below the cluster of support. So I would respect that cluster of support. Just shift it a little bit higher. All right, maybe to take the profit at 281.9, something like that. Okay. All right. So in this case, if you had limit, okay, had a limit order at 283.2, for example, yeah, around there, or maybe 283.3, right? Okay, so we calculate the profit first. If you sell at 283.3, for example, at the limit order up here, and you take profit at 281.9 minus 281.9, okay, and you're going to have like 1.4. Okay, so 1.4 would be equal to a profit, right, for one contract, right? About $140. Okay, so $140 is your profit for this particular trade. Okay, minus of your commission. That means per round trip per commission, right? So your round trip commission is 1.38. 1.38 multiply by 2. Okay, because open is 1.38, close is 1.38. Multiply by 2, that's 2.76. 2.76 times 1.08. Next year is 1.09 already. Okay, and your total cost is 2.98. Okay, so 2.98 would be your cost, your cost, right, for this trade, right, minus 2.98. You probably make about 137. All right, for me it's different. If I get 140 per contract minus 21.60, you see the huge difference in terms of the my profit and loss. I mean my profit versus yours. Okay, so the commission is a very important component, because yours is it's actually $3. Mine is don't know how many times. Okay. Okay, any question? Okay, let me just quickly cover one of the questions here on the 16th of October. Yes, it turns into a long because there wasn't any chance for a short. You see, it doesn't move below. All right, and in fact that there was a magenta wash line here or somewhere around here. I can't remember, but I think there was, right? It became a long, yeah, and it's logical because it hit to the high. All right, and then you know, we were selling here. I mean, it hit to the high and then resumed that downward movement. Yeah. Okay. Now, no other questions. I will end the session here, and I'll see you again next week. Next week, if we do have a buy scenario, then we will place the orders in the buy. And then hopefully we can have an actual trade up here so that I can show it to you how the trade moved and let you see the moving prices. Okay. All right. So we will wait to see whether the profit, whether the target profit for this one is reached. How many of you actually shorted on that limit order? How many of you shorted? No, none, zero. That's good, Donna. I can always trust you to short, to trade. So you cannot remember how to calculate the target profit, but you can remember how to place the order. Okay, I'll see you again on next week. Okay, thank you. Bye-bye.